Yes, people. Okay, we're taking a look at this Guardian article about the Bank of England and some potential worrying elements around echoes of the 2008 financial crisis, which was a disaster for many people. So let's take a look here. The Governor of the Bank of England, Andrew Bailey, has warned recent investing events in US private credit markets have worrying echoes of the subprime mortgage crisis that kicked off the global financial crash of 2008. Appealing before a House of Lords committee, the governor said it was important to have the drains up and analyze the collapse of two leveraged US firms, First Brands and Tricolor, in case they were not isolated events but the canary in the coal mine. Are they telling us something more fundamental about the private finance, private asset, private credit, private equity sector? Or are they telling us that in any of these worlds there will be idiosyncratic cases that go wrong? He asked. I think that it's still very an open question. It's an open question in the US. He then added, I don't want to sound too foreboding, but the added reason this question is important is if you go back to before the financial crisis, which happened in 2008, when we were having this debate about subprime mortgages in the United States. People were telling us, no, it's too small to be systemic, or basically idiosyncratic. That was the wrong call. When a mortgage lending frenzy ended in a housing market bust in the US from summer 2007, it kicked off a wave of financial turmoil around the world. Banks on both sides of the Atlantic had made high risk bets on billions of pounds worth of US home loans, often funding the spree with short term borrowing. The resulting crisis, which rolled out for many basically months, eventually led to a deep recession and a string of costly bank bailouts in the US and Europe, including RBS and Lloyds here in Britain. Bailey said that the complete nature of some of the financial engineering now in use in the private credit markets has echoes of the past and during this period. We certainly are beginning to see, for instance, what used to be called slicing and dicing and tranching of loan structures going on. And if we're involved before the financial crisis and during it, alarm bells start going off at that point, he told peers. That stuff was a feature of the financial crisis. That's another reason why we've got to use these cases as another reason to have more drains up, frankly. He also made clear he was not reassured by the relaxed attitude of some people in the sector. I sat in a session with people from the private equity and private credit world some months ago who, of course, told me everything was fine in their world apart from the role of the ratings agency, and I said, we're not playing that movie again, are we? Now, the lax approach of rating agencies, sometimes relying on banks' internal models to determine how risky their own products were, was an important aspect of the 2007-2008 crash. Now, the deputy bank governor, Sarah Breeden, appearing alongside Bailey, said the bank would be carrying out a war game exercise in private credit markets to test the linkages between, so that's basically between private credit and other sectors. She underlined some of the concerns about the private credit sector. It's about high leverage, it's about opacity, it's about complexity, and it's about weak underwriting standards. Those are the things that we're talking about in the abstract as a source of vulnerability in the bit of the financial system, and those appear to have been at play in the context of those two defaults. Now, the collapse of the car parts from First Brands and the auto lender Tricolor prompted concern on Wall Street, with JP Morgan chief exec Jamie Dimon comparing them to cockroaches and saying that more could emerge. My antenna goes up when things like that happen. I probably shouldn't say this, but when you see one cockroach, there's probably more. And so everyone should be forewarned At this point, Diamond said, the International Monetary Fund Global Financial Stability Review last week highlighted concerns about the close connections between private credit, markets, and mainstream banks, and the IMF's managing director, Kristalina Georgieva, said it was the issue that kept her awake at night. There you have it, folks. So there could be turmoil in the markets ahead. And if we do see another replay of the 2008 financial crash, that again will be terrible for global and local economies. What do you think about the Bank of England chief's warning there? Drop a comment below. Let us know what you think. Don't forget to like, share, subscribe. Catch you on the next one.